coming? Yes, I told you many times, short market,
over the
short.
years, many times
And
we
then buy when
continue
it's
to
super cheap.
rally back from the brink.
Listen to
Whether
him,
we go
and
back
don't
to
forget,
the
join our
GFC, the
live
great financial
streams. We
crisis,
have free
or
live
the
streams and
COVID
paid as well,
pandemic.
but free. You can join free.
There are those
Listen
who
to
say
him,
you're
what he said.
perennially bearish. How do you respond to that?
Well, first of all, when I was forecasting the 2008 financial crisis, they kept calling me that. In fact, they nicknamed me Dr. Doom back in 2005, 2006 for predicting exactly what happened. And I used to say, look, I'm Dr. Reality. This is what's going to happen. Now, you're correct. The Federal Reserve has been able to paper over the problems by making them worse and kicking the can down the road. So the U.S. economy today is in much worse shape than it was going into the 2008 financial crisis. In fact, it's not even close. So we are in much worse shape.
Do you agree?
Now, the question is, will the Fed be able to pull another rabbit out of its hat and, and kick the can down the road again? That's the bet you're making. But the problem is so much worse right now that if they try to go back to the quantitative easing drug, we overdose. We end up with hyperinflation. I would say that things have changed so much where they can no longer claim inflation is below 2%, so they have room to do QE. When they go back to QE and start cutting rates and try to monetize the debt that we got now, they're not going to get the reaction they got before. We're not going to buy ourselves more time. We're just going to seal our own fate. And everything I've been saying about the macro picture has been accurate. The experts have been wrong on everything except the stock market bubble got bigger, and they don't even know it's a bubble. And they don't even realize that everything the Fed did following the 2008 financial crisis, following COVID, everything was wrong. They made a deal with the devil to buy some short-term relief, and the devil is coming home to collect.
So, Peter, you're king for a day. What should the Fed be doing instead then?
Well, they should have kept hiking rates. Rates are too low. In fact, they never got rates restrictive. That's why gold prices kept going up, because they were always too easy. That's why credit kept expanding. That's why the government kept going into debt. That's why household debt and credit card debt hit record highs, because interest rates were still too low. So the Fed never did what it needed to do to put the inflation genie back in the bottle. That's why it never got back in the bottle. And now it's going to be doing more damage than ever. So what I would do is I would immediately hike interest rates substantially and just let everything collapse, because that's what has to happen. It's going to happen anyway. But I would rather have asset prices fall and debts go into default than create hyperinflation, which is where the Fed is taking us.
So are you saying that we're essentially in like just about everything bubble?
Yes, of course, everything was in a bubble. And that's why we had these trade deficits. It was a function of our own bubble. It's not because foreigners were cheating. The reason we have these deficits, that's the symptom of the underlying problems in our economy. We're trying to blame others for our problems that we created. And we're pointing to the symptom and saying that's the problem. No, the problem is our artificially low interest rates and the fact that it's encouraged excess consumption and discouraged savings and investments. And so we don't have the factories anymore. We don't have the infrastructure. We don't have the supply chains. The Fed has inflated the mother of all bubble economies. And Donald Trump just pricked it.
Do you agree with him?
So is America drunk on debt from your perspective?
We're drunk on debt and imports. And we're about to go cold turkey.
Okay, and then I want to ask you, while we still have time with you, the levels that you're looking for. Obviously, you're very bullish on gold, but some
Did you buy gold?
Bitcoin,
Gold is going up.
A gold
Don't forget
proxy.
subscribe. We have
like
like signals today. We have made money on shorting
and even the S&P
Tesla
500 by
and
year end.
SPX.
Well, the people that call Bitcoin a gold proxy don't understand gold or Bitcoin. Bitcoin is just fool's gold at best. It's nothing.
Don't invest in
but
Bitcoin.
It's a highly speculative digital token.
Risky.
And I think it's going down. I mean, it's already 30% off its highs, so it's not at record highs like gold. It doesn't trade anything like gold. So if you want to buy gold, buy gold. If you want to gamble, and you can gamble with Bitcoin, I just think it's a bad bet. I think the market's going down, especially if Trump sticks to his guns and the tariffs remain. Now, if Trump finds some way to save face and claim victory out of defeat and calls off all the tariffs, we could have a big rally. But I would imagine that rally would be another opportunity to sell. because I don't know that we could put all these, worms back in the bottle here that we opened. I think the bear market has started, and any rally from here is a bear market rally.
So
and
do you
an
agree? What do you do?
opportunity to
I
get out.
shorted
But,
market
if
and
we
made
stay
money.
the course, we're just going to keep falling. I mean, we could
Subscribe, hit
easily
like.
be down 50% in the major averages, before maybe they buckle and the Fed, cranks up the presses.
Peter, I want to ask you one quick question. You said if the market rallies. At this moment, as we're speaking, we are seeing a big rally take shape right here. And this is following some reports that we're seeing that President Trump just announced a 90-day pause for some countries with regard to tariffs. And that is with regard to tariffs on non-retaliating countries. This according to CNBC. What's your thoughts on that?
What do you do with market?
Yeah,
Can
as
you
I
share?
said, that may be the first sign of surrender, because the tariffs are bad for America. And so the only reason that the markets weren't down a lot more was because people were hoping that Trump would call them off, right? So, and now he's saying we're going to have a pause. Well, there's still a lot of uncertainty because maybe they're going to be unpaused. But, yes, that's the only thing that rallies the market, but I would sell into the rally because U.S. stocks were overvalued before the trade war. With the trade war,
Overvalued, it's true.
they're even more overvalued. But they're expensive, and I think the trend to get out of the U.S. is still there. Who knows, what's going to happen. And even if they pause them, what level are they going to come back at? Are they going to be somewhat lower?
But Peter, do I hear a little bit of softening in your voice in reaction to what we're hearing with regard to this 90-day pause? Because there was some thinking that this is just a negotiating tactic.
Yeah, look, it's most likely that you should sell into the rally because, Trump seems committed to this destructive course because he introduced it with a lot of fanfare, Liberation Day, how great it's going to be, how wonderful these tariffs are. So it's hard to believe that he's just going to walk away from that completely and get rid of all the tariffs. So any tariffs we have are going to be destructive to the U.S. economy. And we're not going to bring back manufacturing. When he was president the first time, he kept claiming that manufacturing came back, but it didn't. We lost manufacturing, and the trade deficits got bigger. They hit record highs on Trump's first term. And so he bragged about, doing things that he didn't do in the first term, and he's not going to get them done this term either.
And then, Peter, I want to ask you, this is kind of a thought on, let's say there's a young investor watching this right now, and they're trying to make sense of everything that's happening with regard to tariffs. They watch the sell-off, watching some of a rally here. If you're managing money for a young investor today or giving them advice, how would you advise them for the next decade for success?
Well, for the young investors, as I said, I think buying gold mining stocks is, I think, the best way to really supercharge your portfolio because you have an opportunity to buy an asset class that is so unloved and unowned, out of favor and cheap. And you're talking about, lifetime low valuation. When you're in the biggest bull market in gold in our lifetimes, yet nobody owns the gold mining stocks. At a normal bull market, the gold mining stocks are leading gold. Now, a lot of these stocks are cheaper than they were 10 years ago. Gold so far in the last 25 years, this decade, is up, massively. It's up, 10x. Gold was under 300, and now it's over 3,000. The S&P 500 is down over 60%, maybe 65 or 70% now. I haven't checked, priced in gold. So gold is the best performing asset, relative to stocks or bonds or, real estate in the U.S. And that's going to continue. But none of that is factored into the gold mining stocks that own all the gold that's still in the ground. And they're going to make a fortune mining that gold and selling it.
Okay. Well, Peter, thank you so much for your insight and perspective
So what are you doing?
today. And
Let's
obviously
discuss.
for any young investors,
As we discuss short market,
you need to manage your own risk
you can do it on
tolerance
TD
and
Trade
know your situation, what works for you.
and
This
make
Peter
money on
Schiff, Chief
shorting.
Economist at Global
Subscribe,
Strategy
give like,
Pacific
because we post
Asset
all
Management.
signals every day. We have free
That's it
live
for
stream
this
every day,
episode of Market
and we can discuss, like he
Overtime.
said, short market.
Be sure to
Okay,
like
do
and
it.
subscribe to our YouTube channel for many more from
Yeah, subscribe to
Quality
our YouTube
Network
channel,
and Dynamic
and
Technology.
see you. Bye bye.